Uh, Thank you, everybody, for coming today. I will make a brief presentation of Mike Kayamori, who is the CEO of Liquid Group, a global cryptocurrency platform that provides trading, exchange, and financial services powered by blockchain technology. Mike is a major player in Japan's startup space. He co-founded Coin, a company part of Liquid Group, in 2014, and with Mario Gomez. Mike can share with us today 22 years of experience in investment, business management, IT, and venture capital across Japan, United States, India, Southeast Asia. And prior to Coin, Mike was a senior vice president at SoftBank Group. So today, Mike will mainly give us an overall outlook on financial technology, but also tell us more about the announcement made by Liquid.com earlier this month. Liquid was established at $1 billion in company valuation and became one of only 2 tech unicorns in Japan's startup space. It was founded in 2014 and achieved unicorn status in less than 5 years. So Mike, today the key talking points will be the $1 billion valuation, Liquid as an established unicorn in Japan, and an ongoing series of fundraising. And so thank you so much for joining us today. The floor is yours.
Thank you, Natalie. Everybody, thank you for inviting me today. It's my honor and pleasure to share about our company, our history, and how we look in the future. I also apologize that I have a sore throat today, so I brought some nodoame with me. So please bear with me if I start coughing. But I think a little bit of an introduction of myself. Natalie, thank you for introducing me. But my name is Mike Kayamori, and I'm the co-founder, CEO of Liquid Group. We have several portfolio companies or subsidiaries under the group, and Coin Corporation is the Japanese entity that is licensed and regulated under the Japan Financial Services Agency. We are the first global exchange, crypto exchange, to be regulated and licensed under the Japanese regulation, and this was 2017 September. To this date, there's been maybe a few other global exchanges who are licensed now in Japan through acquisition, but organically getting a license in Japan, we were the first, and to this date, the only one. I'm also surprised that I was introduced or invited here to talk about our financing round, because as a fintech company, $1 billion valuation is just a number. When you look at other financial services, when you look at banks, securities companies, even other financial services, there's multiple unicorns, decacorns, and traditional banks that are valued at tens of billions of dollars. From that perspective, it was surprising to hear and the response that I get in the media around being a unicorn, because I look at this as just a number, and going forward, assuming we continue to be successful, it's just a starting point. At the same time, I am cognizant of the image that comes with the term unicorn, which started in Silicon Valley about 10 years ago. And that does bring a lot of responsibility. At the same time, unicorns also do fail. There's a lot of unicorns who do not survive. So as a CEO and founder of my company, it's important that we aim high, but we also make sure that we progress and focus on our business. So a little bit of myself and how I founded this company. So having lived both abroad and Japan, I had the opportunity to study in university in Japan and also business school in the US. After studying business school, I joined a venture capital firm. And prior to that, I worked in a Japanese conglomerate, Mitsubishi Corporation, which is one of the most traditional conglomerates in Japan, working on very traditional and established businesses. But going to business school, and this was immediately after the dot-com bubble. So I went to HBS in 2001. So the bubble burst in 2000 and 2001, and that was when I went to business school. And people were talking about how the internet was dead. And also during that time, there was an Enron incident where there was like governance issues and all the issues that was very critical about the environment in the US. But when you go to business school, it was all about innovation. Right? So people knew, maybe in the media, people were against internet companies saying it was all about chasing eyeballs. But at business school, they were talking about how innovation was going to change the world. So that really spurred my interest on technologies and internet. So I decided to leave Mitsubishi and join a VC firm after business school. And I decided to stay there almost 10 years. So fast forward, in 2010, that was when the first wave of Bitcoin came in the US. So as you know, 2008, there was a global financial crisis. Companies like Lehman Brothers, Bear Stearns went out of business, and these were established financial services or banks that was in existence for over centuries. And it started a global recession. So as an antithesis of that, the Bitcoin white paper or Satoshi white paper came out in 2009. And then the first wave of Bitcoin came in 2010. I was a junior partner at a VC firm looking for new opportunities to invest in. And at the time, Bitcoin was the new internet of money. It was the digital cash. It was the future of finance. And it immediately intrigued my interest. But there was no place I can buy. Right? Smartphones were still not there yet. There was no exchange that I could buy. It would have been great if I had bought some Bitcoin at the time in 2010, but unfortunately, I couldn't. After that, I joined SoftBank. So I kind of had a period where I moved from Silicon Valley to Asia. And I was in charge of India, Indonesia, Southeast Asia. And that was when the second wave of Bitcoin came, and that was 2013. So a price of Bitcoin surpassed $1,000. So that was when it took everybody by surprise. And it was led by China and Asia because these were the countries that didn't have a strong national currency. They didn't have like a US dollars. They had their own national currency that was unstable. So that was one element. The other element was the countries that I was responsible, like Indonesia, India. You look at the adult population, and over 30-40% did not have basic bank accounts. But as SoftBank, which was pushing mobile internet, the smartphone revolution was starting. So even people who didn't have bank accounts had smartphones now. And with a smartphone, with a data plan, you had an app and you have cryptocurrencies or digital assets. That was financial inclusion. So to me, that was the aha moment in 2013. And also, that was when I met my co-founder. So I was in Singapore. My co-founder, Mario, who was the CTO of Credit Suisse APAC's fixed income, currency, and commodity division. So he built bond exchanges, commodity trading platforms, and we met through a mutual friend. And we've decided that at the time, if you wanted to buy or sell Bitcoin, it was Mt. Gox. But when you do a little bit of research and bulletin boards and social media, you knew that they had some trouble. So talking with Mario, Coinbase just started as well. So we looked at the landscape and knew that there had to be an opportunity for an exchange that was built by bankers, that was built by people who worked in financial institutions, who built bond exchanges, commodity exchanges, FX platforms. So that was 2014 when we started together. And fast forward, we realized that a lot of also the beauty of Bitcoin is that it's global, it's borderless. So anybody who was interested could buy cryptocurrency. And we found out that a lot of people from Japan were signing up and buying crypto. As you know, Japan is the largest retail FX market in the world. And the top 3 service providers or FX brokers in the world are from Japan. So to these Japanese retail FX traders, cryptocurrency was the next shiny currency that was much more interesting. And it wasn't only CFDs or trading, but you can potentially use it. You can potentially wire it, use it as a remittance, use it as payments. You can give it to your friend. You can receive it from your friend. So it was something much more than a currency at the time. So because of our volume grew in Japan, we've decided, and we were from day one, we were a pro-regulatory exchange. As you know, when we started in 2014, it was only Bitcoin. Ethereum still did not exist. So as an exchange, if you were to provide an exchange service, it was Bitcoin and fiat currency, US dollars, Japanese yen, or Singapore dollars. So you had to work with existing financial institutions. You had to work with banks. Only now, where there's a crypto-only exchange, there's stable coins, there's thousands of tokens, so you do not need to work with a bank. But at the time, you had to be compliant. You had to meet the bank's KYC and AML standards. So from day one, we were always pro-regulation. And that's why when we found out that the Japan regulators were putting in a framework that was passing a legislation, it was natural for us to apply for a license. And in 2017, we were the first global exchange to receive the license from the Japan FSA. The other interesting thing is in 2014, when we started, there were including us, there were 4 exchanges in Japan. We all started roughly about the same time. So other than Liquid or Coin, there was CoinCheck, Xife, and Bitflyer. As you know from what happened, is most of these exchanges have been acquired by other financial services, or they had to change their entire shareholding structure. We're the only exchange that has continue to do business, acquire new customers, and our trading volume and transaction has reflect our growth. So when you combine these unique elements, when you look at the future, when everything is becoming digital, so internet has disrupted almost every industry. It started from information and content. It disrupted commerce. It's disrupting everything like Internet of Things. And now with cryptocurrency and blockchain, it's disrupting value. It's Internet of Money. It's Internet of Value. So initially when Bitcoin started, people looked at that as a subset of the Forex industry. But now with crypto assets or digital assets, it's disrupting almost every sector within the financial industry, from bonds, equities, debt, asset-backed, currencies, payments. And when you look at that, it's easy to imagine in another 5 years, 10 years, 20 years, how cryptocurrency and blockchain can potentially disrupt the existing financial industry in a positive way. When you look at that, I'm actually surprised that there's only a few unicorns in this space today. The other interesting thing of fintech and financial services is that compared to internet, where winner takes all, if you're dominant in search, you dominate the world. You're Google. If you're dominating social media like Facebook, you dominate the world. Compared to that, financial services is highly regulated. There's always local and regional billion-dollar companies. In Japan, there's 3 mega banks. There's 2 large securities companies, and there's a variety of financial services. You look at Hong Kong, Singapore, there's no one dominant global retail financial service that dominates the world. So from that perspective, the beauty of fintech and finance is there's going to be strong local and regional operators. And we believe when you look at Asia, there's only a few exchanges that are pro-regulation that has business both in Japan and Asia and global that is growing in this industry. So I think that's the reflection of how the shareholders and investors value us because they believe in the digital future, the internet of value, and how crypto and blockchain will be the epicenter of that. And then when you look at who are the potential independent companies that can grow in that sector, they look at Liquid. So that's where we are today. I'm very much open to any questions that we may have. Thank you.
Thank you so much. So now we will open the floor to questions. Please use the microphones. There are 3 of them around the tables. So please.
And if you can mention your name and where.
Affiliation.
Yes.
Thank you. So, John.
Is it on? Yes, it is. Hey, I'm John Southurst, and I'm with bitsonline.com. I think my main question is, the history is very interesting, but we'd like to know where it's all going from here. Do you see these fintech and particularly crypto Bitcoin companies as moving more into the banking sector, which would mean getting a serious banking license? And also, if that's what the roadmap is, what particular challenges do you face in that field?
Yeah, so that's a great question. The beauty of cryptocurrency and blockchain, the underlying technology, blockchain, is it's multifaceted, right? So when Bitcoin came in, people look at that as a currency. But then there were people who were saying that's digital gold. But then people look at the application and they say, we can use that for payments. We can use it for remittance. But then there's volatility. So Bitcoin might not be the best medium for exchange. But then there's these stable coins that are happening. The interesting thing is when I started Liquid in 2014, it was only Bitcoin. But now there's over 2,000 tokens. Also, when you look at cryptocurrency itself has evolved. So there's pure cryptocurrencies where it's completely decentralized. There's no token issuer. The example is Bitcoin. Also maybe Ethereum, where there's a foundation, but there's no more token issuer. So that's pure cryptocurrency. Then there's these payments tokens, utility tokens, ICOs. These have token issuers. The tokens fit a certain purpose, whether if it's for payments of that service or some kind of ownership. And then there's these security tokens, where whether if it's a debt token or an equity token or an asset-backed token, then there's stable coins. So when you look at cryptocurrency or digital assets, any project that has a blockchain-related project will also issue a token. So from that perspective, it's increasing in multifacets. So it will come into the payment space. It will come in the investment space. It will come in the insurance space. It will come in the remittance space. There's also a big trend where large financial institutions are becoming decoupled. There's fintech companies that are good at doing one thing. And also the beauty of fintech is they're collaborative. And so it's similar with crypto as well. There's all these new companies coming into the space which are good at doing one thing. And they're all interested in collaborating and working together. As a crypto exchange, we believe any financial industry, liquidity is important. So from our perspective, we provide the necessary liquidity. There's going to be many tokens, many blockchain service providers. Also, I look at a world, for example, just taking Japan. I envision a world where anybody can buy Bitcoin or cryptocurrency at local ATMs, convenience stores, huge post offices, online, offline. Are they all going to be an exchange? They're going to be simple buy and sell. They will all need to connect to someone who can provide that liquidity. So from our perspective, we look at an ecosystem where it becomes cryptocurrency and digital assets becomes a natural part of our lifestyle. And then we will provide the necessary liquidity because it's not only going to be Bitcoin, there's going to be many other cryptocurrencies. Loyalty points will all become digital tokens, and they will also need liquidity as well. So we will start in focus as an exchange, but then as an exchange, do we want to go into lending? Customers might want to borrow and use it or borrow and invest in. Then what is the difference between deposit, custodial service, paying interest? Is that a bank? So all of these things, the boundaries within the financial services is also blurring. It's decoupling, it's going to recouple again, and it's also becoming blurred. The beauty is it's not clearly defined, so there's an opportunity for startups to take on leadership roles. It's not about competing with existing financial services, it's collaborating and complementary services working together. So yes, in our future roadmap, our core is provide liquidity as an exchange, but we will go into other adjacent markets, not only by ourselves, but with working with other partners. I think the very interesting thing is Bitcoin. We just had the 10-year anniversary of Bitcoin in January. So Bitcoin in its existence is only 10 years. Gold has been around 6,000 years. Ethereum is only 4 years. But if any person who understands internet or economics or reads newspapers probably have heard Bitcoin. Maybe they don't understand the technology or how it works, but they've heard of Bitcoin. When you think of a new product or a new service that almost everybody in the world knows within 10 years, that's pretty amazing. So when you look at the next 10 years, next 20 years, it's natural to think that there's going to be much more embracement and enhancement in this industry. I'm not sure if I'm answering your question, but.
Thank you so much. We will go on with this next question. Thank you. Please, can you tell us your name?
Hello, my name is James Parker, and I'm with Standard Capital. So my question is in regards to STOs and a lot of recent regulation that was passed. So I know that there's a lot of sort of controversy around utility token versus security token, and how whenever you trade you get taxed on it, right? Even if it's a utility token. So I was wondering what you think of the current legislation that's in place, and how you think of defining tokens as utilities or securities.
So that's a great question, and it actually differs by regulator. For example, in the U.S., it's very clear from an SEC perspective that if it looks and smells and talks like a security, it's a security, regardless of the form factor, whether if it's digital or it's traditional. If it looks like a security, it's a security. As of today, for example, in the U.S., they are not intending to put crypto-specific legislation. So there's already case studies, and there's this Howey test, which is about 70 years old. But they look at that and try to put cryptocurrency within those past case studies. I'm not saying that's a good or bad thing. That's how the U.S. approaches. So when I explained before where crypto and Bitcoin has many facets or elements, it's very difficult to operate in the US because as a payments, you need a money transmitter license. You need that state by state. You also need FinCEN registration as federal. But if it's more of a securities or investment instrument, you need a broker-dealer license. If you're going to do derivatives, you need CFTC. And then if it's more of a currency side, there's OCC, Office of Currency Control. So as a service provider, it's very difficult to operate in the US, especially where there's both federal and state. I look at Japan as the polar opposite of US. And as a conservative nation, I'm pleasantly surprised where Japan stays or states regarding crypto regulation. And that's maybe because Mt. Gox happened in Japan. It happened in Japan's backyard. So as a regulator, they need to make sure that it doesn't happen again, which unfortunately happened last year. So they want to have it under control. So Japan is the first global economic powerhouse to have crypto-specific legislation. And actually, a lot of Asian countries are following Japan. So Japan in 2016, so that's 3 years ago, they passed crypto-related legislation as part of the Amended Payments Act. So at the time, they only looked at Bitcoin and cryptocurrency as a mean of payments, or as you can use it as a medium of exchange, but they looked at it as a real medium of exchange or part of the Payments Act. They never looked at, hey, now you can do margin trading, you can do contract for difference, you can do derivatives, you can raise capital. That did not exist when they passed that legislation. But as it turns out, when people and traders came in and started actively trading on the platform, it was natural for service providers to offer more sophisticated products. And that's where there's Bitcoin or crypto derivatives, ETFs, using Ethereum as raising capital. So this Congress or this Kokkai, Japan is passing a new legislation or supplementary legislation that looks at cryptocurrency as a capital markets product. So it looks at derivatives. It looks at ETFs. It also looks at whether if it's a utility token or a security token, if the token issuer is raising capital from retail investors, it needs to have the similar guidelines and risks. It needs to be transparent. It needs to have disclosures. It needs to do proper KYC, AML, all the things that are necessary from a capital markets or financial services perspective. So Japan, when they passed this Kinshoho related type 1 or type 2 or crypto related legislation, they will actually be now complete. So now you have the payments element, you have the spot trading, now you have leverage, margin, derivatives, and capital raising. So Japan doesn't really look at, is this a security or is it a utility? They look at, are you raising capital from retail or accredited investors and all these things. So US looks at it more from a utility and security perspective. Japan looks at it more from holistically looking at crypto and the nature of it. And for example, Singapore is somewhere in between. So it's very different by state. But the beauty of crypto is, and this is, I think, the beauty of innovation and technology, is people look at ways where, oh, now I can use this as a utility, as a payment, as a loyalty. Oh, I can also use this as a way to raise capital. And with that, I can raise it from a global investors who are interested in supporting my vision and my platform and my product. So that's the beauty. So Japan sometimes get criticized for being very conservative, but for crypto, bringing some guidelines or bringing clarity actually helps it grow. So I think people in Japan or service providers in Japan, although being compliant and getting the license is difficult, it actually brings a lot of clarity in terms of what you can do versus what you cannot. So it's a very good thing.
All right, no, thank you.
Thank you. Mr. Kurt.
My name is Kurt Siebel. I'm an associate member here at the club. It just happened this morning in the Japan Times. You mentioned that you were part of SoftBank at one stage. Mr. Son apparently lost 150 million on his Bitcoin operations.
Yes.
I think from an outsider, and I'm still an outsider, it's very much a question of trust into the system. I mean, it's like trust into the bank, trust into the Bitcoin. And when you mentioned Mt. Gox, you mentioned also CoinCheck, and these kind of incidents are not exactly supporting the trust into the system. What do you think about what can be done about the security of the investments, particularly also for the small retail investors who have no power to carry over into these big amounts?
Correct.
Thank you.
Correct. So I think it's part of the industry growing up. So when internet first came, it was a technology that came from I think the military and NASA, and people didn't trust the internet. Right now, I think people don't even question whether are you doing services online or not. A lot of the elements that people didn't trust are being solved. It's still not completely solved. Like, for example, Bill Gates of Microsoft in 2004 said in 3 years, spam will be gone. Today, spam is by far one of the most powerful, and there's phishings and all these things that continue to go on. So trust and security is a core part of any service. The challenge of crypto, because it's still very early, that the underlying technology is found strong and stable. So, for example, the Bitcoin blockchain has never gone down since its existence. When you look at any other banking service, they have issues, they have downtime. But the Bitcoin blockchain, people can say it's overcapacity or it's slow, but it hasn't gone down. It's never been broken. It's never been compromised. The challenge is when people exchange on service providers, how do they secure your private keys, the custodial side, the settlement side? And these, because there were no frameworks, it's still the wild, wild west when you look at globally. So you almost have to blindly trust the exchange or the service provider or the payments company or the app that takes on your cryptocurrency and your private keys. There's a lot of initiatives where now there's these decentralized custodial and settlement services where you don't have to relinquish your private keys to an exchange. Or, for example, in Japan, the regulators mandate exchanges that all of the private keys of your customers have to be stored offline, to never be online where it's susceptible to hackers. But is that the best way from a technology innovation perspective? Probably not, because the convenience of being online and being able to send and use and receive anytime 24/7 was one of the strong appealing points of cryptocurrency as well. But as you know, how technology continues to evolve and enhance, I have no doubt that these security issues will continue to improve as well. But as you can see with other markets, that security will never be it's like cancer. You can never cure a security. It's always hackers will come up with a new one, security companies will come with a new solution, and it continues on. So this will continue to go on. The challenge of Bitcoin and cryptocurrency was also where if you're a social media or any company, yes, a credit card number might get stolen. Your social security number might be stolen. It might be compromised. That's bad and terrible, but it doesn't mean your assets will be stolen. But in crypto, when your private keys are stolen, your crypto is stolen as well. So the magnitude or the damage, the profound damage that it could happen in crypto is much larger than any other service. So as a service provider, what keeps me up at night is always around security. Also because cryptocurrency trading and exchange is 24/7, 365, right? Where there are banks operating hours. When you look at securities, there's the stock exchange operating hours. Even FX providers don't operate on weekends. Compared to that, cryptocurrency is 24/7. That's also the beauty of it, but also, which means from an operator perspective, you need to have the structure, the support, the operations to able to manage that. So it's going to be an ongoing improvement, and only after there's more trust and confidence in these exchanges will cryptocurrency go mainstream. So it's going to take a little bit of time.
Thank you, George, please.
I'm working for Swiss Radio and Television.
Could you please use the microphone? Thank you.
My name is Baumgartner. My name is Baumgartner. I'm working for Swiss Radio and Television and Radio France in Tokyo. What is your business plan, the business plan of your company for the next 5 years? And are you planning maybe one day to sell your company to a big bank?
Yes, so I'll answer from the last part. I think there's already, I wouldn't say pressure from regulators or from the industry that as a startup in the crypto industry, which needs a lot of resources now to be compliant on security and risk and operations, that doesn't make sense to be part of a larger financial group. I think for example, in Japan, there was a period when there was a lot of consumer lending, but they were all became part of a larger financial institution. And I don't know if there's any independent consumer lending companies in Japan today. I look at cryptocurrency where there's going to be service providers who will excel and work under a larger financial institution. But the nature of crypto is very different from, for example, like consumer lending, where the business model is very simple. Crypto, even within the 5 years that I've been operating, has evolved, where it was only Bitcoin. Now there's over Ethereum and 2,000 tokens. There's new consensus algorithms. There's derivatives. There's many innovation. Unfortunately, when you become part of a large conglomerate or financial institution, it's very difficult to optimize, prioritize, and innovate. So there are going to be so simple exchanges will be an offering that banks and securities companies and payment companies will offer. But when you look at the innovation side, I strongly believe that when you look at the innovation's dilemma and how innovation starts from a startup rather than a portion from a large existing traditional company, I think it completely applies to the crypto industry as well. So I look at Liquid as an independent, standalone company that will continue to put innovation and customers as its core and grow. Where necessary, they will work with other financial institutions and fintech companies. But I look at our company being independent and growing. There's going to be others. Already when you look at CoinCheck, which is now part of the Monex group, there's a lot of these acquisition that will happen because there's a lot of cost associated operating a 24/7 exchange with proper security and compliance and governance.
So what are your plans for the next 5 years?
Yeah, so our core business is an exchange, and it's actually very similar to an e-commerce site. You will go to a certain e-commerce site because it has a vast amount of selections or products that you can buy. And also there's a lot of financing plan. You can buy it with your credit card, you can do chakubarai, or you can pay later, you can do installments. So I look at cryptocurrencies and tokens very similar. As an exchange, I want as many tokens to be listed and of being available. For example, Liquid Global has over 100 crypto tokens for users and traders to trade and buy. In Japan, we only offer 5, and that's because in Japan it's the white list, and there's a little bit of a regulatory things that we need to overcome as an industry. But it's very similar. As an exchange, we want to offer as many tokens with as many financing options, from derivatives to spot to margin to being able to buy with credit card, from bank wires as well. So in the next 3 to 5 years, I believe in a world where payments companies, banks, financial institutions, ATMs, convenience stores, service providers will all start offering cryptocurrency, and they will all need liquidity, and we will be providing that. So that will be in the next 3 to 5 years. But then we'll go into adjacent areas, whether if it's providing crypto or blockchain solutions, or working with banks or getting a banking license to enhance our product offering. But our core will always be crypto and blockchain.
Yes. Thank you. Yes, please.
Hi, I'm Edward. Edward Borley. I work for a brokerage called CLSA.
Okay.
And I was just thinking, considering how advanced Japan is on the regulation front, they're pretty behind on the tax front, specifically capital gains tax, unless things have changed in the last couple of weeks. I seem to remember it's like treated as anonymous income, and it's like 50% plus tax rate if you decide to sell, which to me is a stifling rule for.
Yes.
So reforming that would be pretty big, and I'm surprised they haven't done that yet. So I'm wondering, are you personally involved with influencing regulation in Japan? If you are, who with? If not, who is? When you see Japanese politicians, stating opinions on crypto, one wonders who's telling them what, and that's just Japan. I don't know how it's working globally, and there's obviously different dynamics by region. But any insights on that front would be quite interesting.
Yeah. So that's a fascinating question, because the reason is this: Japan doesn't charge consumption tax, right? So when you buy or trade crypto, there's no 8% consumption tax that goes in. Yes, there's the capital gain or ordinary income, which can go up to 50%, and that's detrimental. But that's something people are working on. So Japan has, when they pass legislation, they have a yushikaigi. So they bring in industry experts to discuss these things, and then that will be formulated into legislation. Part of this new capital markets related licenses, it is in discussion about these capital gains taxes. So it might not happen immediately, but I have no doubt that it will be part of the capital gain tax. For example, in Singapore, it's still GST, so a consumption tax of 8%. So anyone who wants to buy Bitcoin will have to pay that GST. That's 8% on top of the 60 万 or $5,000, which it is right now. So when I look at this, new markets will always have, because it's new, it will have challenges that needs to overcome. For example, in crypto, I always tell our team and our board and our shareholders that there's 3 government authorities that we will always work with. One is the regulators, like the Japan FSA. One is the tax authority, because again, some people will use cryptos as a mean for not paying taxes or moving value. And then there's the police, using cryptocurrency for illicit payments or something like that. So as a service provider, we always work with regulatory authorities, tax authorities, and the local and Interpol as well, global police. So all of these, which is part of the industry going mainstream, will be sorted out. That's why when crypto becomes more of a capital markets product, it will, I have no doubt that it will become more of a capital gain tax from that perspective. So it's just going to take a little bit of time. And also there's the other very positive thing is there's governments who work on it, and Asian governments are looking to Japan for insight on regulating crypto for their own country. Obviously, US has its own way of doing it. But when you look at Asia, they're looking at Japan as best practices and good practices. And also there's intergovernmental organizations now, like the FATF, which is the Financial Action Task Force. There's IMF. And these, I think the FATF made a public announcement last October mandating governments and regulators to regulate cryptocurrency because it could be used as a mean for money laundering and terrorist financing. So when you look at each government and these intergovernmental organization, they're working together, G20 as well. But it just takes time. But I have no doubt that these will be all sorted out and to the benefit or finding the right medium from a regulatory perspective and also from a customer perspective.
Are you talking to them?
So there's a SRO, which is I forgot what it stands for, but it's a self-regulatory organization or association. So I'm part of that association, and that association will represent the service providers in terms of talking with regulators and with the necessary advisory board for that, but not individually. Individually, we go to the Japan FSA every month to explain our business and what we do. It's part of the improvement order that every operating exchange. So we have a dialogue with them every month. They come to us as well, saying that later this year, the FATF is visiting Japan. They're going to inspect banks and financial services. They're interested in meeting crypto exchanges as well. Would Liquid be able to meet FATF? So there's an ongoing relationship and dialogue between the regulators and us, and also the association.
Thank you. Do we have a next question? Please, John.
Sorry, another one for you. I know Liquid has its own cryptocurrency called Cash, spelled with a Q. And I was just wondering if you could tell us more about the nature of that, what kind of crypto it is, whether it's a utility or a security or just a trading token. And also, how important is the value of that asset to your operations? I know things like Binance Coin and Tether and other stablecoins have got a lot of attention for their operators, but I'm not really sure what role that value plays.
Yes, so it's extremely important. So even as of today, it was probably one of the largest ICOs in Asia, even as of today. And it was actually, technically, it was an IEO. So there's a little bit of a difference between an ICO and IEO, and I can explain. ICO is a token issuer conducting a token offering, an initial coin offering on their own website. So they will do all the necessary, preparing the white paper, preparing a landing page, preparing a token swap where buyers will fund Ethereum and they'll get that token. As you know, fundraising or capital raising should not be a core of a company. And typically, when you look at traditional financial services, they do it when they go like IPO, initial public offering, they do it through like a Tokyo Stock Exchange and work with underwriters. So an IEO is an initial exchange offering. So what is happening now is token issuers, rather than trying to raise capital themselves and have hacking and issues, they will raise capital through an exchange. So our cash token ICO, we did it on our exchange. So all the users were KYC cleared. Everybody pre-funded their account, and on the day of the token purchase, it's not a fear of missing out. It's just an automatic purchase process. So we were ahead of the market, and now people are doing IEOs now. We will probably have one of the largest IEOs in the world in the next couple of months. So please stay tuned. But regarding our token, it's a utility token. It's not an ownership. It's no dividends. It's not profit sharing. It's a utility token that you can use to pay for our services. And as our service expands, the utility value increases as well. So when we go to lending, when we go to trading, when we go to other services, including maybe banking, and being able to settle, pay in our token and getting discounts and promotions and offerings, it increases the value of our token. And these tokens will start become interoperable as well. So at the ledger level, they'll be working with other tokens. And as the ecosystem grows, we're going into the US as well. So that token will be able to be used in the US. When we expand to get licensed in Singapore, it'll be able to be used there as well. So all of these things are absolutely important, because the token buyers who bought our token believed in our service, believed in our platform, and they purchased the tokens to use on our platform, and we are delivering that. Thank you.
Thank you. Mr.
Hi, my name is Tatsuo Kawasaki. I run a private equity fund, so slightly different from the capital sources of your very successful fundraising recently. But I'm just kind of curious. Fast forwarding to, say, 5-10 years from now, where is this going to go? Is this going to continue to be kind of outlier, providing very interesting access to different financial products that don't exist or haven't existed really today? Or is it really going to merge into some sort of mainstream financial markets in the end? And what's your preference?
So my preference, or what I believe what's going to happen. So I'll do it from both angles. From day one, we were always pro-regulation. I wanted cryptocurrency to go mainstream rather than being a niche product of liberal users who were potentially anti-government, anti-centralized, or it was okay if you wanted to be a niche and if you wanted to live within that bubble, which is perfectly okay. And those were the initial people who embraced Bitcoin and cryptocurrency. But we wanted to be that intersection. We wanted to be that exchange that brought cryptocurrency mainstream. And today, there's still people who are in the libertarian space who will say, we want to be unregulated. We only work with regulators who understand us. We're regulatory arbitrage. That's very different from how we look at it. We look at core markets. We believe that for cryptocurrency to go mainstream and stay mainstream, it needs to be regulated in global economic powerhouses, whether if it's US, Japan, EU, or like Switzerland and Singapore. It won't be like Malta or other parts of the market. So it's going to be distinctly, there's going to be people who will look at this more unregulated industry. We look at it more from a mainstream financial industry. And when you look at security tokens and when you look at the direction of where digital assets and crypto assets are going, I have no doubt that it's going to go to mainstream financial services. It's no longer a subset of the Forex market with digital assets and crypto assets. It's going to positively disrupt all financial services. So from that perspective, it's only going to be natural. I see financial institutions, Fidelity, custody banks, Goldman Sachs, all of these people starting to have trading desks and services. And this is only 10 years. When I started this company, people thought I was helping money laundering. So it was very negative. I couldn't open a bank account. Fast forward 5 years, there's still negativity because it's so disruptive. So I would say 50-60% of people who work in my company come from existing banking, whether if it's investment banking or retail banking. What they all tell me is there's a risk in staying in existing banking. AI is replacing traders. You don't need retail banks and branches anymore. Everything is going to be mobile and digital. Do you really need to go to a branch to wire money? Stable coins might just replace us. So when you look at that, I look at crypto and blockchain and how it's been evolving, that it's going to be mainstream. I don't know if that will be 3 years, 5 years, or 20 years. I hope it doesn't take us time as gold, where it's 6,000 years. But when I look at Bitcoin with its 10-year anniversary and with Ethereum with its 4-year anniversary, it's pretty amazing how it's changing. Another interesting data point is when we look at our customers, the average age is a millennial. They're in their 30s. When you talk to the 800-pound gorillas or the securities companies in Japan, their average customer age is 65. And they represent almost all of the assets that they handle, or AUM. They're concerned that in 10 years, they might just totsuzenshi, because all of their customers who are 65 now are going to be 75. And from them, getting millennials to be their customers is almost impossible now. So when I look at that in another 5 years, 10 years, 20 years, that cryptocurrency, digital assets, crypto assets will undoubtedly go mainstream. And there's going to be existing financial institutions that are going to be progressive, and they will be working with startups and innovators like us, or they're going to be passive and negative ones as well. So when you look at the evolution of technology, human over the past 2,000 years, 3,000 years, they haven't really transformed. Yeah, they might become a little taller, a little bigger, but all of the innovation and productivity is coming from technology. And I think this is the first time where technology is innovating money and value. And that's why I believe and I aspire that this will go mainstream. I can't predict whether if it's going to be 5 years or 10 years, but it will definitely happen, because digitization will never go back. Once people know that, oh, I can do everything on my mobile and use it and trade it and receive it, and now I can do insurance, I can do other tokens, it's all going to be here. And it's going to be global. Right? So it's not only going to, I prefer a Japanese yen or I prefer an equity in this market, it's all going to be global. So it's going to be interesting times.
Thank you. So we are already, it's 12, so does anyone have the last question maybe? And otherwise, people can exchange around the table just after this conference. Is there any last question? If it's not the case, I will close this talk, and I will.
Thank you.
As all the guest speakers at the FCCJ, we give you 1 year
membership or
membership.
lunch.
So
Thank you.
so
Thank you.
much.
Arigatou gozaimasu. Thank you. Thank you.